Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1643rd edition of Short-Term Trading Live with Oscar. Good evening, traders. This 1643rd edition of these educational videos is geared for 7/10/2017, July 10th, 2017. That's Sunday through Monday. Most of this is short term, a little bit is slightly longer term. Pay attention to the whole video. This chart is gold on the daily. If you don't know this, you'll certainly find out if you start trading, if you're new to the game. If you're not new to the game, you already know this, but futures trading is extremely risky, causes substantial financial loss, is not suitable for all traders. You must know that this game can be very expensive, and you've got to use stops if you're going to play the game. Always place stops, always place them first. Know that some stops can have slippage, but that's much more rare than the stops that knock you out of a bad position. Put your stops in, put them in first. Join me in my free live trading room at livewithoscar.com. Now, let's move forward. Traders, this is gold for trading on Monday. Ever since the double comp, which worked well, the gold broke down, got through the 200 ball moving average, and is continuing on its tailspin. And OMNI is red for trading gold on Sunday through Monday. Looking to sell August gold if we get our opportunity. Keep your eyes on that. It has been falling apart very nicely. There are other things I'd like to speak about. Hey, my last two videos, the last two calls, absolutely terrible, just terrible, horrible when it comes to the indices. The last two calls were just absolutely terrible. So let me put an ugly X there. My apologies, but you'll see why in a few moments. The NASDAQ has literally been one day up, one day down. So instead of going towards NASDAQ Sunday, Monday, we are going to trade other markets, gold being one of them. Let's look at a few that look extremely appetizing. Soybeans, look at this bad boy go, a breakout above the 200 bar moving average. The market is exploding. We were long for it on Friday. We will get long again on Sunday, Monday, if we get the opportunity. Then you've got other markets that are in the soy complex. Let's go look at soy meal. Look at this monster. The soybeans just got through the 200. Look at where the soy meal is on the 200 bar moving average. So interesting, right? This is the 200 bar moving average. The grains, at least soybeans, soy meal, severely breaking out above, leaving gaps along the way. You got to love what you see there. And because NASDAQ is flipping from red to green and green to red, maybe you could look at something else like a crude market for trading tomorrow. That would be wonderful for the downside. We love the idea of selling crude. OMNI is red for selling crude, and we expect that it will continue in this fashion to move down towards its target of $37 a barrel. Now, that may not be the low, but that's our target for now. We'll reassess that as we get closer. But on its way to $37 a barrel is absolutely where it's heading. We made the call when we were up here at this line, which was very close to 57. It was 54.63. The price of 57 is right up here. And we said that the crude, before ever moving from this spot up to this spot, so in other words, we thought before crude moves this high, it will move this low instead and just keep on going. And boy, oh boy, so far, I mean, look how far it has to go to reach 37. That's down here, and we do expect it. Nothing goes all at once, right? He had a big down run and then a little upturn. Now more down run coming, so stay with the OMNI, stay bearish, and we will expect the market to move lower in crude. Then, once again, staying away from that crazy NQ, and here might be a reason why. I'm not staying away for too long, but let's at least observe for a little while. First of all, bravo how it bounces off the OMNI average, right? You got to love that. Bingo, off the OMNI average. You would think it's a buy. However, look at this big bear flag, and it absolutely worked. The market broke down. So if you take away the elation of staying or holding the OMNI average, and you look at this and say, well, is this another flagpole? These quick down days right here, does that constitute a flagpole? And is this an Oscarism F flag brewing right here? Or is this a traditional flag brewing right here? I don't know. I'm afraid to just run in and buy for this reason. Once again, move everything away and look at what this has been doing lately. Red, green, red, green, red, green, red, green. What day are you supposed to buy and then buy the next day? What day are you supposed to sell and then sell the next day? Very difficult trading lately, so we will avoid this for a few hours, if not longer. Maybe, just maybe, it's a flag developing. Maybe it's not, and it's going to hold the OMNI average, right? Well, there's enough indecision there to say, I just showed you a bunch of other markets where we can have some fun. If that doesn't work for you, you can look at something like CMG, because we started selling that on Thursday and Friday, and OMNIACs are still short CMG. Now look at CMG. Yes, the stock market looks like it's going up. Yes, it's been going up for quite some time. Yes, 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 I don't care. Some stocks go down. CMG is marked for the downside. Chipotle Mexican Grill. This is an F flag, an Oscarism known as an F flag. This is representative of the 200 bar moving average. The market built an F flag below the average. Not just that. Take this whole thing away as if it doesn't exist. You dropped below this massive pennant. Got below it in the form of what could be one of my Oscarism F flags. If that's the case, I'd say we've got some more downside action. The fact that you're below the 200 alone and below these two red lines is bearish. Then if you believe in my insanity called the F flag, and the reason why it's an F flag is because at the end of this life, it appears all of us OMNIACs end up getting by the flag. So while it's good. When it's not, you get F'd. For now, it's an F flag. It is pointing lower, below the 200 bar moving average, and below this massive pennant. Live trading room. Join me, traders, live with Oscar.com. Just come on down there. Membership is free. Create a username and an email address. Come on in and join us. The water is warm at livewithoscar.com, and I will be heading up that room. There is more. We're not done. I showed you some great trades already. Now let's go look at one more. We are going to call this one our, I guess, chart masterpiece. Let's just label it chart masterpiece for what it is, because I think that's what it is, and let's go look. 10-year notes, traders. Chart masterpiece, if you will, for this evening. 10-year notes. Look at this. The way this just shapes into, you know I'm going to point it out, right? You can probably see it already. Look at the way this takes perfect shape as a flag. So is that the flag, or maybe the flag expanded and it's here and the pole goes down a little further? What is the difference? That's about as flag as it is going to get for us. Now this is on a weekly, not a daily. Let's be clear about this. This is on a weekly bar. These things take time to pan out. It's not a daily. But when it goes, it's going to go. If that is the flag, well, then you've already started the breakout. If that's going to hold like it did here last time, well, then the flag expanded, but it is still a flag and eventually will pay dividends to the downside. So that is your chart masterpiece on your 10-year notes. This is not for running out and trading right now, but know that this is absolutely pointing towards a big arrow in the downward direction. When all is said and done, this will be the direction that that flag will take us in. That is what's supposed to happen technically, and I would stake any flag that I've ever called. I'd stake my reputation on calling flags on this one. That looks pretty darn good to me. Traders, I read the newspapers as I love to do all weekend, and I really get into them and I dig deep, and I have to say, of all the newspapers, Investors Business Daily was not total gloom and doom today, but by the end of the fall, that paper this weekend made it seem like the market was coming to an end. Financially, the world was coming to an end, and the top was coming Undoubtedly. Now that's the funny part about this. Even my hero, love you to death, Ray Dalio, basically made it sound like the end is near. Get ready to run for the exits. And I say it is not over until it is over. You cannot call a market this huge over until it calls itself. Now, the Fed backing off liquidity, the Fed backing off buying bonds, Europe backing off liquidity, Japan backing off liquidity. Yeah, maybe that will be a top. Maybe it will not be. We're not going to worry about that yet. Come huddle with me at livewithoscar.com. We'll see about that in the future. Remember, this is a weekly. This is longer term. What I just showed you in those other charts was shorter term. Come join me at livewithoscar.com in my free live trading room. And remember, keep your emotions out of trading. One of the best things you can do, in my opinion, to help keep those emotions at bay is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Rock and roll traders, I'll see you all at livewithoscar.com.